Hi, good evening. This is Ashwin. Today I'm going to talk about something which is being very commonly discussed across the globe. And if you are a fan of global economics and politics, this is going to interest you. This is about the oil game. Before starting, I would just like to quote you an example. What if you're going to a superstore and the storekeeper offers you a can of refined oil for free? And he's offering you 10 rupees or 20 rupees on top of that. It's really going to interest you, right? So, we are going to discuss something which happened to crude oil in the recent past. Before starting, I would like to take you through the last 5 years on what happened to crude oil. In 2014, crude oil was actually trading at an all time high. It was probably the golden era of crude oil when the oil prices were trading at around 114 barrels per day. And when I'm talking about the oil prices, we call it as WTI, Western Texas Intermediate. It is actually a trading hub and it's a standard in which the oil price is actually measured. So the oil was trading at around $114 per barrel in 2014. And then what happened in 2014? US started producing shale oil more, and the US, which is actually the highest consumer of energy, started using shale oil instead of crude oil. And this actually put a lot of pressure on the price of crude oil, or the demand of crude oil. As a result of this action by US, what happened? The crude oil supply actually exceeded the demand because US was not consuming crude oil. So this actually kind of put immense downward pressure on the price of oil, and the oil price was literally crashed from $114 in 2014 to almost $27 per barrel in 2016. That's quite a sharp decline, right? So, if you're interested in stats, I would just like to quote that the average price in 2019 was around $93 per barrel, and the average price of crude oil in 2016 it came down to almost just mere $43 per barrel. So, because of this falling oil prices, who's going to be majorly impacted? There must be someone, right? It is the OPEC countries. So what are these? Who are these OPEC countries? OPEC stands for Organization of Petroleum Exporting Countries. This is a cartel which was formed in 1960 by five member nations, which included Iran, Iraq, Kuwait, Saudi, and another country. And this five member nations got expanded year by year, and now it stands at 13 countries. And these countries, which are like mainly Middle Eastern countries, were heavily impacted on the falling oil prices. Why? Because these countries were heavily relying on exporting of oil in order for their economy to flourish. Example, Kuwait was actually trading on oil to such an extent that 95% of its revenue came only from oil exports. So, because of this falling oil prices, this is going to impact the country's revenue, right? Apart from this is also going to have another impact. This is going to impact the production levels of these countries. How? If oil is trading at below par level, it becomes technically or financially infeasible for these countries to produce oil at a very profitable rate. As a result, what do? They close down on many of the wells. This brings down the production also. So it is a double whammy. The price comes down, the production also comes down, and the revenue is going to impact it twofold. So what these countries did, these countries decided to strengthen their cartel by adding a non-OPEC member. The non-OPEC member is none other than Russia. Before moving forward, I would just like to state that the OPEC countries were contributing 45% of global oil production in 2016 before forming this cartel. This OPEC plus cartel, which included Russia also, they decided on a production cut in September 2016. Why a production cut? Because whenever there is a production cut, what happens? The demand stays where it is, the supply comes down, and when the demand supply gap is minimized, the price of the commodity goes up. So, with the aim to spike up the oil price and get their wells up and running, this cartel decided on a production cut of 2.1 million barrels per day, which means these countries which were producing 33.8 million barrels per day, they agreed upon to produce only 31 million barrels per day, so that as I said earlier, the price was expected to go up. Did that happen? And did these countries comply with that? Yes, these countries complied with that big time, and many of the countries like complied with it like fully. And the price of this actually kind of reflected in the price of oil. The price of oil shooted up from almost $43 per barrel, which I told earlier, to almost $65 per barrel within a span of 2 years, which is 2018. And in 2018, the oil price rose up to $65 per barrel, and like many of these wells became up and running. And then what happened? Slowly, the global economies started kind of experiencing a slowdown. So because of this experienced slowdown, the oil prices came declined gradually and gradually, and by the beginning of 2020, the price was standing at $30 to $32 per barrel. This was kind of okay for all these OPEC countries because they were expecting the oil price to go up in 2020, because they were kind of expecting the demand to go up. But did that happen? You all know what happened. In February 2020, the coronavirus was declared as a pandemic and it became widespread. And then what happened? These I mean, not only these OPEC countries, the world countries started stumbling and the global oil demand fell sharply. So the global oil demand, which stood at 100 million barrels per day, is expected to come down to almost 70 million barrels per day in 2020, which means there is a 30% fall in oil demand. So what is this going to do? This is going to put further pressure on the oil price. And will the OPEC countries be okay with it? Definitely no. So what did they do again? OPEC countries, which is headed by Saudi Arabia, went and met Russia to once again further reduce the production cut and get Russia agreed for a further production cut of 10 million barrels per day. But did Russia agree to that? No, they said the share of production cut which they have been asked to reduce is extremely high, and it was not agreeable to Russia. Because of this, I mean, just to combat the Russia's decision of not agreeing for the production cut, Saudi Arabia decided to unleash a price war. They decided to not comply with any of the production cuts, and they flooded the market with their oil. And what happened? There is already a declining global demand, and the oil was flushed into the market. And as a result of this, the deal fell apart in March, and on 9th of April 2020, within a span of 1 month, the price of oil crashed from $30 per barrel to, you know what? A negative $2 per barrel. That was quite unbelievable, right? That's why I quoted an example that what if your shopkeeper gives you a can of oil and on top of that a 10 rupee note to entice you. So this is what happened. The reason for the oil as a commodity to fall less than $0 per barrel is that there was no place to store oil. All these huge companies who actually kind of produced in excess, they didn't know where to store their oil, and they kind of gave oil for free. And on top of that, they were also shelling out money to kind of give out oil, or to store this excess oil in some third party's place. So this negative oil demand, negative oil price was kind of a war which was initiated by Saudi, and it was kind of a measure which was taken against the Russia's agreement to the meeting which they had in March. So this negative price, the entire globe was ready to buy like oil because they're getting it for free. And who's kind of impacted with this? Not only the OPEC countries, it's also the US, because they were having their shale oil production up and running ever since 2014. With a falling oil price, what happened? Shale oil actually kind of lost its importance, and people started consuming more crude oil, and this led to US kind of halting their shale oil production, which was kind of not likable for Mr. Donald Trump. So Mr. Donald Trump decided to chip in between Saudi and Russia and make them agree for an agreement, so that the price of oil once again, the price of crude oil once again shoots up, and which makes the shale oil also consumable by the people who are actually buying shale oil before the oil price crash. So, what happened? Did Donald Trump succeed? Yes, he succeeded big time. Russia said okay for this production cut, and the actual agreement was to cut 10 million barrels per day by the entire OPEC plus cartel. And the Russia share was around 2.3 million barrels per day, and they were okay with it. And ever since the deal was announced, the price of oil started picking up again, and now it's trading at around $20 to $22 per barrel. So overall, this is how the price of oil gets impacted by the world economies and the world politics. And being an Indian, how is it going to impact India? It's going to impact India in a really good way, because the price of oil actually kind of forms one of the major import components. And India, being a high energy demand country, it almost procures 85% of oil, of their oil, domestic oil needs from the external world, and only 15% is being produced internally within the country. And this fall in oil prices is going to impact the India's current account balance in a very positive way, because they're going to shell less dollars to procure more oil. And this is going to impact the country in a good way. But then, because of the lockdowns and shutdowns announced by the government, they were not able to reap the benefits to the best possible extent. And having said this, being a consumer, how is it going to impact me? It's not going to impact me as much as it's going to impact my country, because the reduced oil, whether the oil is going to be trading at negative dollars, or it's going to be trading at 30 or $100, the price which I'm going to pay to purchase 1 liter of petrol is going to be the same. That's because the petroleum industry is highly regulated in our country, and the government actually adds a lot of cess and other indirect costs to it, so that the price doesn't, the price of petrol doesn't gets impacted really seriously because of this falling oil prices. But in a way, that's good, because even if the price shoots up like to more than $100 in the future, the price of petrol is not going to raise that much because of its highly regulated nature. And also, it's a very big political call to increase the petrol. So from the consumer point of view, it's not going to have a very big impact. But the idea of this video is to just give you a glimpse of how the world politics, the world economies, the world organizations are coming together to determine the price of this one of the most important commodities in the world. Hope this interested you, and it gave you a kind of bird's eye view of what has happened in the last 5 years or so. And till the time I meet you with the next interesting video, it's signing off, Ashwin.